Good morning, traders, and welcome to the weekend update here for March 31st, 2024. So here are the current open trades. Let me just kind of take these, I guess, a little bit in order. So this one is going to be expiring first. This is our April 19th trade in SPY, and this was a skewed iron condor. And we'll see where our markets take us this next week. I expect some continued chopping, some decay happening in this, getting this back into a little bit of profitability. I'll then probably look to be thinning this trade out, taking risk off both sides of it. I'm not looking for huge gains in this trade just because of the amount of times this had to be adjusted. Again, as most of you know, each time you have to adjust a trade, you have slippage, you have commissions, and we just need to lower our expectations on them a little bit. We're going to have the same scenario here with Apple, although this doesn't expire for quite some time yet, so this is going to sit and still decay as well. The next one is going to be this April 30th trade, this SPX. It started as a 60-50 broken wing fly. And this one also has had a few adjustments to it, looking at a lower expectation on this. Now, I'm looking at probably maybe closing this here in the next 1 to 2 weeks. There may be an adjustment that I'll try to put on this that can basically reduce the risk throughout the trade, possibly give us a little more theta decay. And the step that's out there right now is there's an order that's floating out there to basically just close some of these butterflies here. And that will achieve that goal for us. Now we're a ways away from that butterfly. So, it's not a real active set of strikes that are being traded there. If we get a little pullback, that will certainly help, and we're more likely to get a decent fill on that. So that would be a good scenario for this one, is maybe just a little bit of a pullback and then a chop sideways for a few days, and then might be able to close this one out, 5-7% range, somewhere along there. Then we'll get to this 419 trade. Now this says DWAC, but of course that has changed to DJT, which is True Social, the SPAC, the special, what the heck, again, I looked up SPAC after the last time I talked about this. I'm drawing a blank on it now. Special Access Company or something like that. It basically is a container or an existing symbol out there that you can use as a way of taking a company public without going through the actual process of taking the company public. You merge with an existing stock symbol that's out there. So that's what's transpired here. This shows a large loss, but as I have explained repeatedly, there is not a large loss associated with this. It is simply just showing a very erratic T0 line, which I explained in detail before ever entering this trade, that would in fact be the case, that this would show some very, very erratic P&L numbers. I actually have done similar trades personally in another account, similar P&L diagram, and I have at this point closed out almost all of the call spreads and been able to do so in a way that raised this right wing to a profitability state. So the only risk that's in those other trades that I have is down here below the 45 range or 44 range, and that's because the put spreads, of course, are still on there, and for another, I think, a week or two in some of those other trades. And I'll be looking to actually do the same thing here. Now, I was assigned 2,900 or 2,400, I think it was, short shares after the close on Friday. So on Thursday, I was assigned 2,900, or, well, let me see exactly. Let me give you an exact number here. So DJT, 2,400 short shares at the close or after the close on Thursday. I've already been through the process of how I'm handling those short shares. There is a video for everyone in the circle on this trade. It actually, in my opinion, works in my favor because I did get absolute full value on those short shares that I sold. So these short shares right here, basically whatever I sold them for, I was given full value in exchange for those short shares. And then there's also some erraticness, some wide bid-ask spreads that are taking place in the long shares. And I can use that to my advantage to get somebody to, essentially overpay, if you will, for those longs that I have to sell. So I sell this essentially as a covered call scenario where I'm buying back my short shares and at the same time selling an overinflated long call. So I will be needing to do that on Monday because right now, because of the large amount that I was assigned, I will have a negative buying power in that account. So the broker will reach out to me Monday morning and say, Steve, you've got a whole bunch of short shares here. You've got to close some of them. And of course, the way of closing those is buying back those short shares and at the same time selling an equal number of these long calls. So again, this has worked in another account that I've done this in. I've been able to get very, very favorable closes on those, which have, again, given me profitability on this particular side of the trade. Whether that'll happen or not on Monday, not sure, but I think I've got a good chance of it happening. The history is there that shows me that I can, in fact, do that. And that was one of the draws to this trade to begin with, was the fact that the bid-ask spreads were so wide that I could get such a crazy favorable entry. Again, I sold a $1 wide or a condor with $1 wide wings. I sold it for 96 cents, which means that my total risk was 4 cents per condor. Of course, I have on 30 of them. So, but all that said, that's crazy reward to risk. That's a trade that I'll take anytime I can get it. And again, I'll see about whether or not I can work this into some profitability come Monday. But I will have to thin this out. The broker's going to reach out and say, Steve, you're short way too many shares of this for your account size. And you're going to have to close out some of those short positions. Personally, I would love to maintain some naked short stock positions in this because this is just a crazy, crazy, crazy overvalued stock. There is no rhyme or reason why it should be trading at these levels from a company standpoint. If you're looking at it as a voting method or some sort of political statement, maybe there's reasons that people are driving it. But from a sheer business standpoint, it makes no logical sense at all. The company has lost massive amounts of money over the past couple of years. It is just a fraction of the size of, X and, Facebook and some of the other social media platforms out there. And there's just no way that it should be carrying this valuation. If you valued this company based on its earnings or what people might view its potential earnings to be, company should probably be valued at $2, $3, $4, somewhere in there. So it is a meme stock. And again, sometimes playing meme stocks can be beneficial because of the crazy wide bid-ask spreads. So that's about as far as we need to go there, I think. This trade is chunking along just fine. Again, this is a broken wing butterfly. I have raised this right wing a little bit here. We'll likely look to do that again this week. Got a very favorable entry on this trade. Haven't had to adjust it too much. So all of that is in our favor on this trade. And again, this is the ideal situation. You get one of these trades on when volatility is up a little bit. You get a very favorable entry on it. Once you get that favorable entry, the trade becomes much easier to work and adjust. And again, you also have very limited to no upside risk in the trade. So we'll continue working with this one. Again, likely just rolling up this right wing if the market remains up above the tent of this particular broken wing fly. Then NVIDIA, this was a brand new trade. This is a little bit different type of trade. This is a trade that I really like when I have a bullish thesis on something and there's been a recent pullback, because the recent pullback puts some volatility in the trade. And getting that volatility allows you to basically get more premium. And the premise behind this trade is I'm buying a call spread. So if I buy the call spread, that basically means that a pullback for that call spread I'm buying is going to be good. You can see that's going to create some positive profitability in this particular trade if I just had this spread on. Now, the opposite side here, of course, when I have that put spread on, that's what's giving me a lot of decay or premium that can decay out of this, the theta decay, but that also carries with it quite a bit of risk. Now, that risk is quite a ways away here on NVIDIA, all the way down at 800. So if we come here, take a look at our chart, go to NVIDIA, you know, where our risk is all the way down here. Now, can NVIDIA get there? Yeah, it can for sure. And, you know, it could, I mean, it could come all the way back here into the 650, 600 range. I don't see under any thing that I can see right now, I don't see it really coming below 800. But if it did, 600, 650, somewhere in here is probably the next stop. And so this trade is set up with two long puts quite a ways down here, that if that were to happen, if this were to tank, and of course if it tanked, volatility would spike dramatically, and if volatility spikes dramatically, that drives up the value of these long puts, and it comes in and kind of mitigates some of the risk in this trade. So that's the concept behind this trade. So that's the pro part of the trade, if you will. The con part of the trade is this trade is out about 50 days when I put it on. So after about 30 days in time, let's just march this thing forward here. After about 30 days in time, the value of these long puts is decaying pretty rapidly, and it's a spike in volatility at that time is not going to have as big of an input, okay, because there will have been a fair amount of decay that will have happened on this trade. So that's the potential risk in this trade, is that if you get a major pullback, that major pullback happens later in the trade as opposed to earlier in the trade, when these long puts won't gain in value as much. So the whole key to this is we put this trade on, but then I plan on having this trade largely closed out after about 30 days. So if we look at this 30-day scenario here and we don't have any massive pullback, I should be able to get some really nice profitability out of this trade, maybe 8, 10, 12%, somewhere in that general range, even in a little bit of a pullback. If the market rallies up, even better yet for me. And again, that's kind of my premise here on NVIDIA, is that I feel it's more likely to rally back up here into this 900, 950 range, possibly even make new highs, than it is to, come down here into the 800, 750 range, whatever. So again, personal opinion of mine. And I built my trade to accommodate that. If someone has a different opinion, of course, this trade, as I showed when I put it on, this trade can be put on in a whole wide range of different ways. That you can make this spread a little bit narrower. Of course, that's going to give you a little bit less profitability in an upside breakout. You could have bought the long puts closer, somewhere much closer or more of them, and you'd have a flatter T0 to the downside. So again, the nice thing about this trade, kind of like butterflies, quite frankly, is I can model this for almost any scenario that I can imagine and give myself downside protection in the process. So that kind of wraps it up for the current trades that are open. Again, this one, be looking to thin, potentially close out. Likewise, with the assignment that I got on this, I will be looking to thin that. The broker's going to basically tell me to thin that out. I'll be raising the right wing here, just letting this decay a little more, letting this decay a little more, letting this decay a little more. So that's kind of the summary of our positions. Now, let's take a look at our markets. If we come in here and look at SPX, we are still working on this same wedge, big uptrending wedge. So this thing is continuing to climb. Let me move my face out of here. We can see volatility is quite low, so people really don't have any fear of this market as of yet. and SPX just continue to motor on. So what do I expect here? Well, probably just like I said last week, maybe a little pullback about to this uptrending line, and then probably a rally. But this, this is being very well respected here. So on both sides of this equation. So there's going to have to be something that's going to change, either a significant break of this uptrending line, and I don't mean just a break on a day. I mean a break of a day, and then maybe the next day it opens well below here and then continues lower. That's what I would consider an actual break of this uptrend line. The same holds true out the top, but right now I'm thinking pull back here to, the 5,200 range maybe, and then rally back up to probably new highs, maybe close to 5,300. Possibly, I think we're more likely to break out to the upside than we are to the downside based on the current technicals. Again, the current technicals being this solid uptrend, the fact that most uptrending flags or wedge patterns break in the direction of the flag or the trend pattern. In this case, that would be an upside breakout. We can also look at SPY. And taking a look here at SPY, we can see again, same thing, and I could have just as easily drawn that big channel. This is really the exact same chart pattern. I'm just showing it in two different ways. I'm showing it in the big wedge on SPX, and I'm showing it here in this channel on SPY. And both of them are telling me the same thing. Both of them are telling me we're continuing to look at an upside channel that's being very well respected, very well adhered to. Anytime we pull back to the bottom of that channel, buyers come in. Anytime we're bouncing off the top of that channel, sellers are coming in. So again, a pretty darn good roadmap at this point that's been in place here for 6 months, something like that, 5 months. So, the market is telling us or showing us its path. Let's take a quick look at the VIX, the volatility index. And it also is making new lows or back to its lowest lows down here in this, 11 range. I mean, that's just incredibly low VIX readings. That's kind of about as low as VIX will historically go. And while we were escalating a little bit, fear was getting a little higher here, just a little bit, not a lot. We were making higher lows. We were making higher highs. So VIX was in a little bit of a minor uptrend, but broke through that and now is remaining lower down here. So we are in a very low VIX environment. Low VIX, again, means essentially no real fear in the market out there that people are feeling. They're not out there buying insurance for their portfolios right now. So that means that nobody is seeing anything that's freaking them out. Of course, that doesn't mean that something doesn't come out of left field and spike this thing up to here, very, very rapidly. But right now, people just aren't seeing it. Let's take a look at the RUT. And in the case of RUT, RUT is also in a very large wedge pattern. It did put in a little bit of a breakout here, and that breakout happened, and then the next day we opened where we closed the prior day, ran up higher, then pulled back a little bit. But this is right now looking like a little bit of an upside breakout. We'll have to see how this follows through here this next week. But if the RUT continues to go higher, and it would likely follow a wave pattern. So if we look at 21 here, the top here of call it 2111 down to 2011. So that's a 100-point move, and then back up. Usually the breakout will tend to mimic the prior waves, which have been in about the 100-point range. That's 2062 down to 1982. Here we're 2050 down to 1950. So we've been running in close to 100-point waves. So if we were to break out, I would expect, 2200 would be a likely top to this next wave and then pull back probably about to this 2100 range. That's what the rut is kind of telling us that it seems to be setting up for, based on this breakout actually holding. Now, if this breakout pulls back inside here early next week, then I think we're just kind of looking at the bottom, coming down to the bottom of this channel again, bouncing back off it, and just continuing to form this wedge pattern. But again, right now we are looking at a little bit of a breakout, and most of you probably know that the ETF for RUT is the IWM. That's the Russell symbol. And we can see here that we have volume is a little bit higher when we're making up moves than it is when we're making down moves. This is also a little more of a bullish indicator. More and more people are getting on board when this thing starts rallying up, as opposed to selling when the market is selling off a little bit. So people they're holding this with tighter hands. They're not just dumping their shares when the market starts to sell off. More buyers are coming in when that happens. So kind of another indication that the RUT and or IWM is maybe going to have a breakout that might be sustainable here. So that is it for the weekend update. Thank you, everyone. Those of you of the Christian faith, have a happy Easter. And I guess that's it for this weekend. Take care.